The Kansas City real estate market was just rated as one of the hottest in the entire country. Mortgage rates are still dropping, but not enough to move the needle for most home buyers. And it's been about 2 weeks since the major landmark changes to the real estate industry. This video, we're going to break it all down, including 3 key trends that you should watch out for, especially if you're thinking about buying, building, or selling a home right here in Kansas City over the next year or two. Now, starting with part number 1, Kansas City, the hottest real estate market in the entire country. We're going to break down some of the trends behind this because they're very important to know. As you can see, this is from US News and World Report. Scrolling down, we're going to avoid a lot of the charts, a lot of the data that's not relevant to us. So this is one of the relevant parts. We actually tied with Austin, Texas. This is based on data from June 2023 to June 2024. The numbers that you're seeing on the screen, the 72.8 number, that is out of a score of 100. And I'm going to show you an ad-free version of the article that really breaks down how they came to that conclusion. So here's what it says. Greater Kansas City, Missouri area surged to the top of those June rankings. 3 primary factors for that. The first is a sharp increase in demand. Now, later on in the article, they explain that a lot of this is due to job increases, the growth of the city as a whole. We'll get to that one in just a second. The second one is higher affordability compared to home prices around the entire United States. And number 3 is more supply. In our case here in Kansas City, it's a rebound in supply, but we're still nowhere near the pre-pandemic levels in 2019. Now, scrolling down just a little bit, it says the Kansas City area grew over 15,000 jobs, a growth rate of 1.3%. Of course, Kansas City as a whole is growing very quickly. The Chiefs, the Royals, new stadiums being built could be a very big thing. We've got large employers coming to the Kansas City area, and of course, the World Cup in 2026. So certainly a good lineup of things in years coming here in Kansas City. This has the highest percent of job increases from that 1.3%, and that 15,000 jobs were in categories including leisure, hospitality, education, and health services. Where this gets really interesting is actually how quickly our housing market here in Kansas City is growing. It says the median sales price in Kansas City rose about 5.7% year over year to $350,000. Now, the reason that's notable is because if we just take a big step back and look at the average appreciation for real estate in Kansas City over the last couple decades, you'll find a number around 3 to 5%, especially if you exclude the last couple years, which are a major outlier and really artificially increase that number. It's really common to find an average appreciation 3 to 5%. So we're still on the high end, even though mortgage rates just skyrocketed over that same time period, right? Tamping down a lot of demand, preventing a lot of people from selling. We're still seeing appreciation on the high end, which is something very notable about our market. Now, back to this article, it says that 5.7% increase compares to the national increase of around 4.2%, meaning the Kansas City market is outpacing the rest of the country by about 1.5%, which sounds really small, but that's a lot of money when we're talking about hundreds of thousands of dollars. One of the main reasons for us growing a little bit quicker than the rest of the country is because our median sale price is about 21% lower than the national median, which is around $443,000. Now, if we scroll down even further, the last part of this article says even with more affordable housing prices here versus many other parts of the country, entry-level buyers will still face formidable competition. They say this is largely due to the recent changes to the real estate industry because of the National Association of Realtors lawsuit settlement. That's what we're going to cover in part number 3 of this video. But before we get to all of that, we're going to move on to part number 2. It's all about mortgage rates. They're still not moving enough, even though they're decreasing, to make much of a dent for home buyers in Kansas City. Before we break all of that down, if this is your first time seeing the videos, and welcome to the channel. My name is Nick Massa. I'm a licensed real estate agent here in Kansas and Missouri. We do these updates about once every other month. The market's changing rapidly, and if you don't want to miss out on future updates, I'd invite you to hit that subscribe button. Of course, if you're thinking about buying, building, selling a home in Kansas City, I'd love the opportunity to win your business. So all my contact info is on the screen. Feel free to reach out however you'd like, phone call, text message, email. We can make all of this info we're about to break down specific to you and really make sure you're set up to take advantage of all of it. So feel free to reach out anytime. We're going to start by taking a look at today's mortgage rates, and then I'll show you the major problem with some of these decreases and one of the key trends that you might want to watch out for over the next year. So here's what the mortgage rates look like over the last 6 months. You can see a clear decrease. We're currently hovering around for a 30-year conventional mortgage fixed rate. We're around 6.58%, which is a clear contrast to where we were around May of this year. We were around 7.58%. So that's a lot of movement, but one of the major problems is that most people are expecting rates to continue decreasing. And while rates have come down almost a full percent over the last couple months, it's not doing much. It's not having much of a dent. And all of that is outlined in this article from fastcompany.com. It's titled Housing Affordability is Stretched So Thin That the Housing Recession is Still Ongoing Despite the Recent Rate Dip. It says, since peaking this year at 7.52% in April, the average 30-year mortgage has drifted down with the current rate around 6.37%. It says that existing home sales remain in a recession. There are just too few people buying homes, selling homes compared to previous years, and we're around multi-decade lows. It says the reason that the recent rate dip hasn't spurred much activity is because a lot of builders are reporting there's a lot of traffic, a lot of people still have interest in buying homes, but a lot of them are saying, I know rates are coming down. I'm just going to wait until that happens. We broke that dynamic down exactly in the previous real estate market update video, which is the reason why you'd want to subscribe to the channel. We like to keep you up to date about all of this so you can take advantage of some of these changes. And that's a big one. If you're thinking about selling your home, you know that there are going to be a lot of people waiting and waiting and waiting until they can try to time the bottom of the market. Of course, one of the major issues with that, especially if you're one of the home buyers who's waiting, is there's going to be a crossover, a point where rates are so low that other buyers decide to jump in the market. Now you're facing competition, rising prices, and at some point that's all going to nullify any advantage to waiting, any advantage to getting a lower mortgage rate. Now, this article goes on to say that just because many markets withstood that 7% mortgage rate and they still continue to buy and sell homes, doesn't mean there are continuous pools of buyers out there who can continue to buy even with these affordability constraints. This article says one of the major reasons for that is higher switching costs. So when you sell a home and buy a new one, it's not just the cost of hiring an agent, paying compensation, it's also the emotional and time cost of doing all the updates, getting the house show ready, and everything else associated with it. So this article says if housing affordability improves, whether it's lower rates, whether it's lower prices, or higher incomes, very unlikely we ever see three of those things happen at the same time. But the real part of this article that's important is the last couple lines. It says, how low would that average 30-year mortgage rate need to be in order to see a big change? This says about 5.5% or lower. And based on where we are today, we're still about a whole point off. So the real question is, how long will it take to get there? And how much will home prices increase as rates continue to drop, demand continues to increase, and the market becomes more and more competitive? Now, speaking of a more competitive housing market, we're going to move to the third part of the video, two recent changes, massive changes to the real estate industry here in Kansas City. So the first major change is that before touring a home with an agent, you got to have a signed agreement with them. This is not the most convenient one. It adds a little bit of friction, especially for the consumer in getting in to see homes. It also, nobody wants to be locked into a long-term contract. We have ways around that. We create a short-term agreement, but that's the first major change, is that if you're working with a buyer's agent, if you're having a buyer's agent show you a property now moving forward in Kansas City, you got to have a signed agreement beforehand. The second major change, in the past, the listing agent and the seller would determine how much they would compensate the buyer's agent. So the buyer's agent, the buyer, they really never got a say in that process until now. It's no longer the seller and the listing agent determining how much the buyer's agent is compensated. Now it's the buyer and the buyer's agent negotiating that. In that second change, negotiating compensation for the buyer's agent, that's what this article is ultimately talking about. So let's reread it again from the top. It says the changes to the MLS will make it much harder for low-end buyers between like a 200, 300, etc. If they can't offer compensation to their agents, they're going to have to ask the seller to pay for it. and there's another ding. It says, by this time next year, we might see a 30% decrease in licensed realtors. Overnight, it feels like it got more formal. So here's what I can tell you. 2 weeks since those changes have happened, I don't see much happening in the Kansas City real estate market that's quite a departure from the norms that we've been accustomed to. There's a lot of misinformation around these changes. They're not new laws, they're just regulations that real estate agents are required to follow. And the major changes to compensation are really, it can't be advertised in our multiple listing service. That's it. That's the major change. You as a home seller are still able to offer compensation to a buyer's agent. In fact, every single home that I've toured with my clients, that has been the case. Number two is that if a buyer was working with a buyer's agent, even before these changes, they were still required to compensate their agent in the event that the seller chose not to. So this isn't really much of a change. It's just that that compensation is not disclosed in the MLS beforehand, and it's subject to change when you do submit an offer. Number three is that the compensation that a seller is willing to offer a buyer's agent can be advertised. It just can't be in our multiple listing service. So what I'm seeing personally is it's being discussed between agents directly. It's going out in emails, phone calls, text messages. It's also on a lot of agents' websites. Is they'll have the property listing, and then they'll also list how much they're offering to compensate the buyer's agent. And then the fourth thing to know is that these new changes do not require buyers to come out of their own pocket to pay their agent. In fact, moving forward, like 99% of the time, what will happen is when they write an offer, they're going to request that the seller cover X portion of their agent's compensation, and that would directly come from seller proceeds. Of course, this is kind of the age-old question of who really pays the compensation for agents, because it's the buyer bringing the money to the closing table. And moving forward, the offers that those buyers make will just specify what portion of that money is going to compensate their own agent. So I could very well be wrong. We're still very early into the ball game here. We'll be sure to keep you updated in the future as all of this changes, the market adjusts, and all of this turbulence hopefully falls by the wayside. So make sure to subscribe to the channel for those updates in the future. Of course, if you're buying, selling, building a home in the next year here in Kansas City, love the opportunity to earn your business and really make all of this information specific to you. Feel free to reach out anytime, phone call, text message, email. I'd absolutely love to set you up for success. And before you go, I've got 2 videos for you that you could watch next. Number one, this is the one that breaks down the major changes to the real estate industry. And then the one above it, that's actually our most recent market update, we break down the window of time where you might be able to get your lower rate and sidestep a lot of competition at the same time. So click either here or here, and I'll see you on the other side.